So good evening, class. We'll now continue our discussion on the computation of goodwill for stock acquisition wherein the interest acquired is less than 100%. Now, I have actually recorded this discussion before, starting with case number 5 from our illustrations, but unfortunately, the recording was interrupted. I was actually discussing for more than 1 hour and I did not notice that the video was no longer streaming. So I will have to repeat the discussion and in order to complete the rest of the discussion for goodwill computation. And this time I will make sure to check every now and then whether I am still streaming or not. Okay. So hopefully there will be no more interruption for this session so that I can finish the discussion smoothly. So we'll start with case number 5, class. Okay. So in case number 5, the consideration paid here is the same as the other illustrations. The difference here is that the interest acquired is now at 90% and the fair value of the NCI is not given. So very similar to case number 1, class, except that the fair value this time is not given. Okay. So as mentioned before, the two things commonly given in the problem would be the consideration paid and the fair value of the net assets. Although the fair value of the net assets will not always be given, but it would be very easy to compute or determine. Now, in case number 5, the consideration given for the interest acquired, which is at 90%, is 120,000. And the 120,000 would be placed or entered in this cell. Okay, because this is the consideration paid for the interest that we have acquired, for the controlling interest. Okay, and the second thing that's given for case number 5 is that the fair value of the net assets is also 120,000. Okay, and once you have these two classes, as I have told you, I want you to complete the rest of the second row because you will not need additional information here. You will just have to apportion the fair value of the net assets of the subsidiary between the percentage of the controlling interest and the percentage of the non-controlling interest. And as mentioned earlier, our controlling interest in case number 5 is 90%. So the proportionate share of the parent or the controlling interest over the net assets of the subsidiary would be simply 120,000 times 90%. Okay, even though the parent and the minority interest will not be splitting the assets, okay, the undivided share of the controlling interest in the net assets of the subsidiary is 108,000. And as discussed before, if your controlling interest is 90%, then the complement to reach 100% would serve as your non-controlling interest. So either multiply 120,000 with the non-controlling interest of 10% or simply deduct the previously computed 108,000 from 120,000. Either way, the proportionate share of your non-controlling interest in the net assets of the subsidiary would be 12,000. Okay. Next would be we would need the value that we will assign for the entirety of the corporation in order for us to solve for the goodwill. And to solve for the amount in the green cell, we would need to determine the value that will be assigned to our NCI. And again, as a rule, the value that will be assigned to your NCI should be the fair value. Okay, and let's check. Is fair value given in case number 5? Unfortunately, it is not. And what do we do if the fair value of the NCI is not given? Compute for the presumed fair value. And how do we get the presumed fair value? By basing it on the consideration paid for the controlling interest. Okay, so 90%, or in terms of fraction 9 over 10, if we're willing to pay 9 over 10, 9/10 of the corporation for 120,000, then that would mean a 1/10 share would be equivalent to 13,333. I'm just using ratio and proportion here, class. But another way of solving this one would be to get the 100%. So if you're willing to pay 120,000 for 90% interest, then that would mean that you view the company as having a value of 100 divided by the interest acquired of 90%. So that means for you, the value of the company as a whole, if you're willing to pay 120,000 for 90% interest, the value that you assign for the company as a whole would be 133,333. Now, if we can check alternative solution for the presumed fair value of the NCI, multiply the uh, assigned value to the company as a whole, multiply that with the minority interest of 10%, we would still get the 13,333. I'm not sure if I've mentioned this in the discussion in the earlier cases, but you'll always have to make sure, class, that the proportionate share of the NCI in the fair value of the net assets, which is in this case the 12,000, is not greater the fair value that you will assign to the NCI. Okay, so again, you make sure that the proportionate share of the NCI in the fair value of the net assets of the subsidiary is not greater than the value assigned to your NCI, whether it's the fair value given in the problem or simply the presumed fair value. For a while, guys, let me just check if I have my audio on. Okay. So going back, the first two rows are now filled in, so we can actually compute for our goodwill. In this case, simply deduct 120,000. Case number 5 would be 13,333. Okay. So case number 5 illustrates on what to do in case the fair value is not the fair value of the end given. Okay. Now will be asked another potential question is how much of the goodwill is attributable to the parent, then it will be answered under the second column. So to answer 108,000. So out of the 13,333 resulting goodwill from the business combination, 12,000 is attributable to the parent, while the remaining 1,333 is attributable to the non-controlling interest. Okay, remember that goodwill is an asset, so the parent and the non their proportionate share, even though no actual partition will take place. Okay, so that's case number 5. Let's proceed to case number 6. So for case number 6, okay, unlike all the other cases we have already discussed, class, in case number 6, we are not given with the fair value of the net assets. Okay, but the resulting goodwill is given. So unlike the previous cases, class, wherein the primary goal was to solve for the resulting goodwill, here the resulting goodwill is already given and we are asked to solve for the fair value of the net assets. So we are asked to work back or to squeeze the fair value of the net assets. Okay, so we are looking for the amount that will be placed in the middle cell of the first column. Okay, so let's check the figures that are given in the problem. For case number 6, we know that the consideration paid is also 120,000. But hopefully, class, you do not develop the wrong consideration will always be 120,000. Okay, it was made 120,000 for ease in our illustrations. Aside from that one, case number 6 tells us that the fair value of the NCI is 50,000. Okay, and that would be placed here. No need to solve for the value of the NCI class because it is already given. Aside from that, we are told that the resulting goodwill is also 50,000. Okay. Okay, now we can actually complete the first row class because the consideration paid to acquire, how much was the controlling interest? 75% is 120,000 and the value assigned to the remaining interest in the subsidiary is 50,000. So the perceived value of the company as a whole would be 170,000. Okay. So if the consideration class is 170,000 and if the perceived value of the company as a whole is 170,000 and the resulting goodwill is 50,000, then that means the fair value of the net assets must be 170,000 minus 50,000. So the fair value of the net assets would be 120,000. And that is what we are looking for in case number 6. But as an exercise class, I want us to always complete the table, even though we already have what we are looking for. Okay? So with the fair value of the net assets already determined, we can actually complete the rest of the second row. All you have to do is to apportion the fair value of the net assets between the controlling interest and the non-controlling interest based on their percentage of ownership. So controlling interest here is 75%. So the proportionate share of the parent in the net assets of the subsidiary would be equal to 120,000 times 75%. So that would be 90,000. While the share of the NCI, proportionate share of the non-controlling interest in the net assets of the subsidiary, would be equal to 120,000 times the non-controlling interest of 25%. Or simply deduct the 90,000 from 120,000. I hope, again, it's already clear to everyone on how to compute for the non-controlling interest. Okay, if controlling is 75, then non-controlling must be 25%. With this one, we would be able to determine now the sharing in the resulting goodwill. So out of the uh, 50,000 goodwill, how much is attributable to the parent? It would be 120,000 minus 90,000, and that would be 30,000. Okay, and then uh, the share of the NCI in the resulting goodwill would be 50,000 minus 30,000. Okay, and that would be 20,000. Now, going back to case number 4 class, there's actually another way of determining the share of the controlling interest, but I do not want you to use this one. To get the 12,000 class, you could have simply multiplied 13,000 times 90%, which is the uh, controlling interest. But I do not want you to use this one class because this will not always give you the correct answer. Okay? But it is correct in case number 4 because we were not given with the fair value of the NCI. We used ratio and proportion to compute for the presumed fair value of the NCI. Okay? So the alternative solution for the 12,000 share of the parent in the resulting goodwill will only work if the NCI in the problem, the value assigned to the NCI is based on its presumed fair value. Now, unlike in case number 5 class, the 50,000 value assigned to your NCI is not based on its presumed fair value based on ratio and proportion class. It is given in the problem. So in that case, it will not work. The share of the parent and the NCI in the resulting goodwill will not be determined using the using the respective percentages after multiplying them with the resulting goodwill. So for example, how much is the controlling interest in case number 6? 75%. Now, if you multiply 75% with the resulting goodwill of 50,000, you would get 37,500, but that is not the share of the parent in the resulting goodwill. Why does it not work? Because the value that we assign to your NCI is not based on the presumed fair value. Okay? The lazy way of solving for the share of the parent and the subsidiary, or sorry, the parent and the non-controlling interest in the resulting goodwill will only work if the value assigned to your NCI is based on their presumed fair value. So please take note of that one. Okay? Let's go to case number 7. So for case number 7, this time we are asked to solve for the fair value of the NCI. So what's given? Again, the consideration, which is 120,000, is given in case number 7. What else is given? We are also given the fair value of the net assets, which is 110,000. Okay. Now, what do I want you to do once you have these two amounts? I want you to complete the rest of the second row by simply apportioning the fair value of the net assets between the controlling interest and the non-controlling interest. So the controlling interest in case number 7 is 60%. So the share of the controlling interest in the net assets of the subsidiary is equal to 110,000, the fair value of the net assets, times the controlling interest of 60%. And you would get 66,000. Now, for your non-controlling interest, if controlling interest is 60%, then that means non-controlling interest must be 40%. So, if non-controlling interest is 40%, then that means the proportionate share of the NCI in the net assets of the subsidiary would be equal to 110,000 times the non-controlling interest of 40%. And you would get 44,000. What else is given in this problem? We are given with the resulting goodwill. And how much is the resulting goodwill? It is 100,000. Now, if the resulting goodwill class is 100,000 and the fair value of the net assets is 110,000, then the consideration or the perceived value of the subsidiary as a whole is 210,000. We are working back. Normally, it's the value of the company as a whole minus the fair value of the net assets. Okay. So, if the perceived value of the company as a whole is 210,000 and we are willing to pay 120,000 for 60% interest in the subsidiary, then that means the value that is assigned to our non-controlling interest is equal to 210,000 minus 120,000. So the value assigned to our NCI is 90,000, and that is the missing figure in case number 7. But again, I always want us to compute or complete the table. So out of the resulting goodwill of 100,000, how much of the goodwill is attributable to the parent? Okay, so simply deduct the 66,000 from 120,000, and that would be 54,000. Now, will the lazy way of computing this one work in this case? The answer is no, because the value assigned to our NCI was not based on the presumed fair value. So to check, the resulting goodwill is 100,000. How much is the controlling interest? It was 60%. And definitely 60,000 is not the share of the parent in the resulting goodwill. Okay? So please complete the table, class. And that means the share of the NCI in the resulting goodwill is 46,000. And definitely, class, it should always happen that the portion attributable to the parent and the portion attributable to the non-controlling interest should add up to the resulting goodwill. Okay? So that's essentially case number 7. Okay, and I hope we are not being too fast, class. Anyways, you can just replay the discussion. Case number 8, So for case number 8 class, this time the consideration paid is unknown. Okay, but we have other information to use. Okay, the fair value of the net assets is given class. Okay, so the fair value of the net assets is 120,000, and we are looking for the consideration paid for an interest of 80%. Now, what else is given in this problem? We are given that the resulting, sorry, it's not goodwill, that the transaction resulted in a gain of 20,000. Again, if it's negative amount, if it's a negative goodwill, that means the business combination resulted in a gain. Okay. Now, what do I want us to do here? I want us to complete the second row first. Okay, as always, we should complete the second row because no analysis is required. You just have to apportion the fair value of the net assets between the controlling interest and the non-controlling interest. Okay, so if the fair value of the net assets is 120,000 and the controlling interest in case number 8 is 80%, then all you have to do to get the proportionate share of the parent or the controlling interest is to multiply the 120,000 fair value with the controlling interest of 80%. Okay. Now, for the proportionate share of the NCI in the fair value of the net assets of the subsidiary, the same procedure, 120,000, but instead of 80%, you would use 20%. Okay. Now, with this one class, we have the fair value of the net assets, 120,000. We have the resulting gain of 20,000. And since there is a gain, what does it mean? The perceived value of the company as a whole is lesser than the fair value of the net assets. So if we work back class, if the gain from the combination is 20,000 and the fair value of the net assets is 120,000, that could only mean that the perceived value of the company as a whole is 100,000. Okay. Now this is where I want students to be careful, class. Okay. So in the other cases, we are able to get the perceived uh, value of the company as a whole, starting with the consideration paid for the controlling interest. But this time it's the other way around. We were able to solve for the perceived value of the company as a whole, and we are asked to solve for the consideration paid to the controlling interest. Just for a while, class. I'll just have to let the cat get out. Okay. Now, students, one way of getting this wrong, class, would be to simply multiply the 100,000 with 100,000 with the controlling interest and the non-controlling interest. So say for example, since in case number 8, the controlling interest is 80,000, 80%, some would simply multiply the 100,000 with 80% and you would get 80, and the value that you will assign to the NCI would be 20,000. Now this is wrong. Okay? This is wrong. One way of knowing that this is wrong, class, is that this violates one of the rules we have established earlier. And what rule is that? That the value that you will assign to your NCI should not be lower than the proportionate share of the NCI in the fair value of the net assets of the subsidiary. How much is the proportionate share of the NCI in the net assets of the subsidiary? 24,000. So if the NCI, if the share, the individual assets and liabilities of the subsidiary is 24,000, then definitely they would not be willing to sell the NCI at less than 24,000. At the very least, the value that will be assigned to your NCI should be equal to the proportionate share in the net assets of the subsidiary. Okay, so that's why we know that this is wrong, because it should not happen that the value that will be assigned to the NCI will only be 20,000 when the proportionate share of the NCI in the net assets is 24,000. In this case, what are you supposed to do? You adjust the 20,000 and change it to at least equal the fair value of the net asset. So the correct amount here should be 24,000. So if the perceived value of the company as a whole is 100,000, this is not debatable, class. The challenge now is just on determining how much of the 100,000 is to be assigned to the controlling interest and the non-controlling interest. Okay. If we are sure that the value of the NCI is 24,000, then this could only mean that the consideration paid to acquire 80% is equal to 76,000. Okay. Now, another way of knowing, class, or checking whether your table is correct, class, is that, always remember this one. If the business combination resulted in a gain, class, if the business combination resulted in a gain, the gain is attributable solely to the controlling interest. So if you check this one, under the second column, 76,000 minus 96,000, sorry, 36,000 minus 96,000, you would get 20,000. And this should make sense. The gain, class, should only be attributable to the acquirer, because the minority interest here is not actively involved in the transaction. Okay, the party involved here is the acquirer and the shareholders who previously owned the shares acquired by the acquirer. The minority interest, those that continue to hold onto their investment, are not involved in the transaction. So it would be incorrect to say that they will have a gain, that they gain from the combination. Okay? Stated differently, class, if the transaction or combination resulted in a gain, if the transaction or combination resulted in a gain, the amount attributable to the NCI should always be zero. That will also explain why we will not allow the value to be assigned to our NCI to be lower than its proportionate share in the net assets of the subsidiary. Okay? If this is not clear, class, okay, just listen to it again until it becomes understandable. This is very important. Okay? This highlights one of our rules, that which is the value that you will assign to your non-controlling interest should not be lower than the proportionate share of the NCI in the net assets of the subsidiary. Second rule, or another rule that is highlighted in case number 8, is that resulting gain from a business combination is attributable solely to the parent. The gain attributable to the NCI should always be zero because they are not involved in the transaction. So, to answer case number 8, class, the consideration paid for our interest of 80% is 76,000, while the fair value that will be assigned to your NCI would be 24,000. And it makes sense, class, that we have a gain of 20,000 because the acquirer is acquiring ownership interest in the subsidiary, wherein its proportionate share in the net assets is 96,000 and it was only asked to pay 76,000. Okay, so in that regard, we can say that the acquirer had a gain of 20,000. Now, proceeding to the last illustration for the computation. Is it the last? I hope I was able to discuss case number 4 in the previous videos. So for case number 9 is very unique, class, in that we are asked to determine the interest acquired by the acquirer. Okay. But what else is given in the problem? We are given with the amount of consideration, 120,000. What else is given? That the fair value of the net assets is 200,000. Now, can we complete the rest of the second row? No, because we do not know the controlling interest, and because we do not know the controlling interest, we also do not know the percentage of non-controlling interest. But what else is given? We are given with the resulting gain. It's a gain because it's a negative amount. The combination resulted in a gain of 40,000. So with this one, we can actually work back or squeeze the perceived value of the company as a whole, not just the portion acquired by the acquirer, the controlling interest. Okay? If the fair value of the net assets, which is given, is 200,000 and the resulting gain is 40,000, this could only mean that the consideration or the perceived value of the company as a whole is 160,000. So if the perceived value of the company as a whole is 160,000 and the consideration paid is 120,000, that could only mean one possible conclusion is that the value assigned to your NCI is 40,000. Okay? And with this one, class, some students would already compute for the interest acquired, and this is where students would get it wrong. And that is why I always tell you to complete the table. Okay? So what would some students do, man? They already have the perceived value of the company as a whole, which is 160,000. They have the consideration paid for the controlling interest of 120,000. So to determine the controlling interest, some students would simply divide 120,000 by the perceived value of the company as a whole, which is 75%. While the non-controlling interest would be 40,000 divided by 160,000. That would give you 25%. So if you are asked how much is the controlling interest, common wrong answer would be 75%. But why is that wrong? Why is that wrong? Because you did not complete the table. Class, if you are solving for the percentage of the controlling interest and the non-controlling interest, the first row is not a reliable source, class. Okay, if you want to know the percentage of the controlling interest and the non-controlling interest, it should be based on the second row. Why? Because what do we do in the second row? We are just apportioning the fair value of the net assets based on the percentage of controlling interest and non-controlling interest. But we do not have a complete second row. So you will have to apply the other concepts in our table, class. And what is that? That if you have a gain, class, the gain is solely attributable to the controlling interest. So if the resulting gain is 40,000, then that means this 40,000 is solely attributable to the controlling interest. And that means the gain attributable to the NCI should be 0. So with this one, remember, class, the 120,000 consideration paid is given. Now, since we know that the resulting gain is 40,000 and that amount is solely attributable to the controlling interest, then that means 120,000 consideration will produce a gain of 40,000 only if the proportionate share of the controlling interest in the net assets of the subsidiary is 160,000. And if the fair value of the net assets is 160,000, if the proportionate share of the controlling interest in the net assets is 160,000 and the fair value of the net assets is 200, then that means the proportionate share of the NCI is 40,000. Okay? Now the 40,000 we computed earlier was correct. Okay? Zero ang attributable ni NCI. So if this is 40 and 120, uh, the interest acquired class should be computed as 160,000 divided by 200,000. The correct answer for case number 9 is 80%. Again, common wrong answer is 75% because they base it on the consideration. Okay, but the most reliable basis for percentage of controlling interest and non-controlling interest is the second row of our table. Okay, so please take note of case number 9. We should be 80% and not 75%. Okay. So let's apply this one class this time. Apply this on a financial statements wherein we are not just asked to solve for the goodwill, but we are asked to present or to compute for the amounts that will be uh, reported in the consolidated financial statements immediately after the combination. For a while. Now, this next illustration class is very similar to the ones we have solved before when we on our first discussion on goodwill computation. Okay, it's just that this is now a stock acquisition and the percentage acquired is less than 100%. So we'll be asked, although we have the answers here, we'll be asked to solve for the goodwill or gain, then the amount to be reported as cash, other current assets, total assets, share capital, share premium, and retained earnings and total shareholders equity. Okay. Now, let's just go over the problem first. So in this problem, Company A acquires 75% of Company B's outstanding shares. Okay, so if you're asked how much is the interest acquired, it is 75%. Okay. Next would be uh, the statements of financial position with the fair values of the assets and liabilities of both companies are given below. So Company A is the acquirer, Company B is the acquiree. And remember, on the part of the acquiree, on the part of the subsidiary, what valuation is relevant? It would be the fair value. And in preparing the combined financial statements, what valuation is relevant in the part of the acquirer, the parent? It would be the book value because no restatement, no revaluation happens on the part of the acquirer. Okay, so book value for company A, fair value for company B. Uh, so the problem tells us that company A paid 70,000 for various acquisition related expenses and 20,000 for stock issuance cost. Okay, the shares of company A have a par value of 10 and a fair value of 25. Now let's try to discuss in advance the relevance of this information. Okay, you have various acquisition-related expenses. Okay, since these were paid, this will have an effect on our cash, also for your stock issuance cost. Okay, now the acquisition-related expense, being an expense, will have an effect on our retained earnings, while the stock issuance cost will have an effect on our share premium. Okay, now we are given with both the par value and the fair value, but we know that for the valuation of the shares issued to acquire a subsidiary, the relevant valuation is the fair value. But we also need the par value class so that you would know how much goes to the share capital and how much goes to the share premium. Okay. Now, if company A pays 600,000 cash and issues 12,000 shares to acquire 75% ownership interest in company B, compute for the amounts to be reported in the consolidated financial statements immediately after the combination. Okay? So please take note, class. The consideration here is mixed, partly cash and partly in shares. No problem with cash, its fair value is equal to its face amount. For the shares, you will have to use the fair value. Okay? Okay, but you have to add these two amounts. Okay? Let's prepare our table, class. Again, the first two things I want us to determine would be the consideration and the fair value of the net assets. Let's start with the consideration, class. The consideration is 600,000 plus the fair value of the 12,000 shares issued. Okay? So, that would be 600,000 plus 12,000 shares. Okay, do not add the 12,000 with the 600. You multiply it first with the fair value. So, 12,000 shares times the fair value of 25. That would give you 300,000. And what does this amount represent? This actually represents the fair value of the shares. Sorry, the fair value of the shares issued. Okay, you paid in cash. You also issued shares with a fair value of 300. So that means the total consideration that you have given is 900,000. How did we get 900,000? 600 plus 300. Okay. So the consideration in this problem to acquire, how much was the interest acquired? 75% in company B is 900,000. Sorry. Next, what do I want us to determine after the consideration paid? Solve for the fair value of the net assets. Okay. So here we have 200,000 plus, then AR 150. Again, ignore the book value for the acquiree. 110 and 260. So this would be 350, 460, 720 plus 280, you will have 1 million, and 350, you will have 1,350,000. Okay? Total assets of the subsidiary at fair value 1,350,000 less the liabilities of 240,000. We have actually here na solved, which is 1,100,000. Then this is the fair value of the net assets. If you already have the consideration paid and the fair value of the net assets, what's the next thing I want you to do? I want you to complete the second row by apportioning the fair value of the net assets between the controlling interest and the non-controlling interest. So 1,110,000 times 75% would give you 832,500. So the proportionate share of the controlling interest in the net assets of the subsidiary is 832,500. Now, the proportionate share of the NCI, 1,110,000 times the non-controlling interest of 25%. You would get 277,500. Okay? Is the fair value of the NCI given? Uh, it's not. And if the problem does not give you the fair value of the NCI, what are we supposed to do? Compute for the presumed fair value by using proportion based on the consideration paid. So if you are willing to pay 900,000 plus for 75% interest in a company, then that means to you, the value of the company as a whole is 1,200,000. Okay? And completing the first row, the value that we will assign to the NCI would be 1,200,000 minus 900,000. We will have 300,000. So if 75% is 900, it makes sense that 25% is 300,000. But again, if the problem gives you the fair value class, you use it unless it violates our rule that the value that is assigned to your NCI should not be lower than the proportionate share of the NCI on the net assets of the subsidiary. Now, is the 300,000 value we have assigned to the NCI in consonance with our rule? Yes, because how much is the proportionate share of the NCI in the net assets of the subsidiary? 277,500. How much value do we assign to our NCI? 300. Okay, the value assigned to the NCI is greater. Now, with our first and the second row being complete, we can now solve for the resulting goodwill. So if the value of the perceived value of the company as a whole is 1,200,000 and the fair value of the net asset is 1,110,000, then that means the resulting goodwill is 90,000. So this would be the answer to the first question. Okay, we have a goodwill of 90,000. In case you will be asked how much is attributable to the parent, it would be 900,000 minus 832,500. This would give you 67,500. While the amount attributable to the NCI would be 300,000 minus 277,500. But had this been a gain, klasa, the resulting gain would be wholly attributable to this controlling interest. None will be attributable to the NCI because the NCI is not part of the transaction. Okay? Now, if we say NCI is not part of the transaction, why will it have a share in the goodwill? Because goodwill will become an asset of the consolidated entity. And since it is a part owner of the entity, then it will also have a share in the resulting goodwill. Okay? So that answers the first question. What's the second question? How much is the cash? Now, what are the things you're supposed to remember for cash, class? Do not forget to deduct the consideration paid and payments for acquisition-related expenses and for stock and bond issuance cost. And it so happens that these three are present in this problem. Okay, we paid 70,000 for acquisition expenses. We also paid 20,000 for stock issuance cost, and the consideration is partly in cash. Okay, so for our cash balance, class, what do? Add the cash of the acquirer and the acquiree. How much is the cash of the acquirer? 1 million. How much is the cash of the acquiree? 200. So 1 million and 200. Okay? But remember, payments were made. What payments were made? 70,000 for acquisition related cost. How much was the stock issuance cost? 20,000. And uh, consideration. Part of the consideration was in cash. So we have 600,000. Okay, so that means the balance of the combined balance of the consolidated entity immediately after the combination would be 510,000. Okay, again, remember the possible transactions that will affect the combined cash after adding the cash balances of the acquirer and the acquiree, consideration paid, payments for acquisition related costs, and stock issuance or bond issuance cost. So our answer here would be 510,000. Now for other current assets, other current assets. Let's check the question. For other current assets, for the parent, again, you will be using the book value or the carrying amount in the books. And then for the acquiree, the subsidiary will use the fair value. Then when you add the two, sorry, retrieve were non-current assets. This is 600,000 and 260,000. When you add the two, you will have 860,000. Now, I want us to do this same procedure for inventory and AR class because the third question in the problem is total assets. Okay, so we'll need this one. So for our accounts receivable, 400,000 from the acquirer, and then 150,000, which is the fair value for the acquiree. Okay, if you add the two, you would get 550,000. Next, inventories, 300 book value for the acquirer, 110 fair value for the acquiree. You would get 410,000. And then can we just have one computation for our all of our non-current assets? We have 900 and 800 for PP and other non-current assets, book value for acquirer, and then 350 and 280 for the acquiree, which is their fair values. Now add all of them, class. You would get 2,330,000. Now to summarize, class, combined cash is 510,000, and then combined other current assets 860,000, combined accounts receivable 550,000, and then 410,000 for inventory. And then for all our non-current assets, we have 2,330,000. Now if you add them, class, if you add them, you will have 4,660,000. Okay? But that is not the correct answer. Because what did we not include? What did we fail to include? What were the other things you have to remember when asked for total assets? Again, very important, class. Do not forget to include your resulting goodwill. And how much was the resulting goodwill, class? Okay, the one we solved earlier, it was 90,000. Okay, again, please do not forget to add the resulting goodwill. So the correct answer is 4,750,000 and not 4,660,000. Please take note of this one. Okay, common errors on the part of the students. They will forget to include the resulting goodwill. So total assets would be 4,750,000. Next, share capital. Okay. Now, what did I say before? When we talk of the share capital or any other shareholders equity account, you do not take into account the shareholders equity of the acquiree, the subsidiary. Okay, it will not be carried to the books. It will result in double recognition because you already recognize the assets and liabilities. No need to record also the equity of the acquiree. Okay, if we're talking about the shareholders equity to be included in the to be included in the uh, to be reported in the consolidated financial statements immediately after the combination, it should only be the shareholders equity of the acquirer or the parent. Now, how much is the share capital of the parent? 600. But why is that not our answer if we are just to follow the share capital of the parent? Because the 600,000 we have here, class, was the share capital immediately before the combination. The questions are after the combination. Okay? Was there any change to the share capital by reason of the combination, class? The answer is yes. Because remember that part of the consideration was by issuing shares. And how many shares were issued, class? 12,000 shares were issued. Okay? At a fair value of 25. That's why we were able to get 300,000, which we added with the cash consideration of 600. Okay? But if we're talking about share capital, class, if we're talking about share capital, the amount that will enter your share capital should only be the par value. Now, how much is the par value of the shares of the parent? 10. How many shares were issued? 12. So how much would be the increase in the share capital as a result of the issuance of shares? It would be 12,000 times 10, and that would be 120,000. So your share capital actually, class, would be equal to the 600,000 existing share capital immediately before the combination plus the increase in share capital from the shares issued for the business combination. So this would be 720,000. Okay. So the answer here would be 720,000. Next, share premium. Okay, what were you supposed to remember for share premium? Okay, it will add the increase from the issuance of shares, deduct uh, stock issuance cost. Okay, but in no way should it be greater than the increase from the issuance. Okay, so just like your share capital, if we're solving for share premium, focus only on the share premium on the part of the acquirer, or in this case, company A. So 300,000. But why is our answer here not 300,000? Because the 300,000 given in the problem was the balance of the share premium immediately before the combination. And we are asked for the balance after the combination. Was there any changes to the share premium as a result, as a consequence of the combination? Yes, because shares were issued above the par value. How many shares were issued? 12,000. At what price were they issued? 25. While the par value was 10. So there is an excess of 15. Okay? So every share issued results in share premium of 15 pesos. And if 12,000 shares were issued, class, the total additional share premium would be 12,000 times 15,000. How much is that? Sorry, 12,000 times 15, not 15,000. That's 180. This is the increase in the share premium. And since we have 300 immediately before the combination, so the total balance of the share premium immediately after the combination would be 480,000. Okay? So 300 before the combination, while the additional share premium from the issuance of shares is 180, share premium immediately after the combination would be 480. Okay. Next question is, sorry, not just 480. Okay, there was stock issuance cost. Pila tong stock issuance cost, class? There was stock issuance cost in the amount of 20,000. So the share premium would just be 460,000. Okay? As I've told you, please remember the things we're supposed to remember. Even I forgot to deduct the stock issuance cost. Okay? So the share premium should only be 460,000. Please do not forget the things you have to remember for all the special items, class. Okay? Next to your share premium would be your retained earnings. What were the things to remember for your retained earnings, class? The resulting gain, then acquisition-related expenses, and third would be the unabsorbed stock issuance cost. But we do not have the unabsorbed stock issuance cost because the increase in share premium was 180, while the stock issuance cost was only 20,000. Okay. Now, what would be the basis for our answer here? We start with the retained earnings of the acquirer or company A. Ignore the retained earnings of the subsidiary. So we start with 2,500,000. Okay. Now, did we have a gain in this problem? No. Did we have acquisition-related costs? Yes, in the amount of 70,000. That would be deduction. Did we have unabsorbed stock issuance cost? No. So, the retained earnings after the combination would be 2,430,000. Okay. Now the next question, class, is total shareholders equity. If we add these three, we would get 3,610,000. Of course, do not expect that to be the same to your total assets, kasi we did not compute for our liabilities, man. Okay. Now, if you are asked how much would be your total shareholders equity immediately after the combination, if you answered 3,610,000, that is wrong. Although that the process would have been correct for other problems, Our computation would not be correct in this problem. Why? Because you forgot to include the NCI class. Okay, if the stock acquisition is less than 100%, please do not forget to add an additional line item to your shareholders' equity, which is to include your NCI in your shareholders' equity. Okay, how much was the NCI? How much was the value assigned to your NCI? You go back to our value assigned to our NCI. Since the fair value was not given, we computed for the presumed fair value, which in this case is 300,000. So this would NCI class, non-controlling interest, would be another line item in your shareholders' equity. Okay? So your shareholders' equity class would not be 3,610,000. It would be 3,910,000. Now, if we add the liabilities class, 600 and 240, liabilities of 840,000. Okay, so it will now match our total assets of 4,750,000. So takeaways, please don't forget the things you're supposed to remember for cash and total assets. The same for share capital, share premium, retained earnings, and as an additional note, if we're dealing with stock acquisition problems class and it is not a wholly owned subsidiary, you're acquiring less than 100%, you will now have an additional line item in your equity section, which is for your non-controlling interest. Okay? Now, although we're supposed to uh, I have just solved the problem class without showing you the computation, the Excel file. I forgot to switch. Okay. But this is how it should look like class. Okay. Let's just quickly go over now. So this will be your cash. This will be your other current assets. This will be your AR. This will be your inventory. And this would be your non-current assets. And this would be your goodwill. Okay. So for your cash class, again, how did we solve for our cash balance of 510,000? Okay, the cash of the acquirer 1 million, the cash of the acquiree 200, payments for acquisition expenses 70, payments for stock issuance cost 20,000, while the cash consideration of 600,000 that gives us 510,000. While the 860 for other current assets, book value for acquirer, fair value for the acquiree. The same for your accounts receivable and your inventory and your non-current assets. Okay, but okay, please do not forget to include in your total assets the resulting goodwill. Okay, and please don't forget that goodwill is a non-current asset. Okay, and the goodwill is based on our table earlier. Now your liabilities, just the liabilities of the acquirer, book value, acquiree, fair value. For share capital class, okay, share capital of the parent only, share capital of the acquirer only, but you do not just blindly use the share capital given in the problem, because the balance given in the problem is the share capital immediately before the combination. Okay, please add the increase in the share capital from the issuance of shares. And in this problem, 12,000 shares were issued. And the par value is 10, so the increase would be 120. Balance before the combination, 600, plus the increase of 120. Share capital after the combination would be 720. Share premium, two things to remember. Add the increase arising from the issuance of shares above the par value and deduct stock issuance cost. But in no way should the stock issuance cost exceed the increase from the issuance of shares. How much was the share premium before the combination? 300. Okay? And since 12,000 shares were issued at 25, which is 15 peso higher than the par value, there is an excess of 15 per share. 15 pesos times 12,000 shares, that would give you 180. 300,000 balance before the combination plus 180,000 increase in share premium from the issuance of shares will give you 480. But our share premium is 460 because you will have to deduct the stock issuance cost of 20,000, which will give us 460. The 20,000 is given in the problem class. Retained earnings. Ordinarily, there are three things to remember for retained earnings. Uh, of course, retained earnings only of the parent or the acquirer. Okay, you add the resulting gain, then deduct the expenses and deduct the unabsorbed stock issuance cost. In this problem, we do not have any gain and we do not have any unabsorbed stock issuance cost. So all we have to do is start with the retained earnings of the acquirer, which was 2,500,000, deduct the acquisition expenses of 70,000, you would get 2,430,000. Okay? Although in the past, we have just added share capital, share premium, and retained earnings to get total shareholders equity class. If ever it's a stock acquisition for less than 100%, please do not forget to include your non-controlling interest. And the value assigned to our non-controlling interest in this problem was 300. So that's why your total shareholders equity would be 3,910,000. Okay. Now, if you add the liabilities and shareholders equity, you would get 4,750,000. Okay. Okay. Now I have given you the answers to the problems in your textbook class, and I'm confident that this discussion that the discussion on the computation of goodwill and their corresponding effect on the financial statements immediately after the combination would be enough for you to answer the problems in chapter 1. And this should prepare you already for our exam. Okay. So if you have any question, you may just comment them, class. Okay. Hopefully this would help you in preparation for our exam. Okay, that would be all.